What's going on, guys? This video might be a long one, so I'm just going to jump right into it. Everything looks great still, no complaints. Starting with the macro on SPY, once again, descending broadening wedge on for a year. Breakout, a retest twice. Confirmation of the retest, find a bounce, reclaim the ascending triangle. I mentioned the descending broadening wedge transitioned into an ascending triangle. So you reclaim the triangle, very tight range here sideways. Before breaking out of it, you get a gap from that breakup and then some more upside. This looks very, very good. Found another new high today, 443.90, high of the day for SPY, almost touching 444. I mentioned in my video over the weekend that 450 was 100% on the table for SPY this week. I think we closed the week last week 430, and I said 450 is on the table this week because of how perfectly symmetrical this is playing out. And it looks like we're going to get 450 this week. Potentially tomorrow. If we don't, we're definitely getting that shit next week. But this looks very good. Golden cross on the daily, very bullish. 55 days in a row, closing over the 200 EMA. Very, very bullish. So jumping into the symmetry once again, the blue box is your middle where you have your lowest low. You have one break above the ascending triangle here to reject the macro of the wedge. So the blue is your middle, and then you come into the red where you break below the 380 horizontal line on both sides. You break below there, you break below there. This one came a little bit lower to retest the macro of the wedge. From there, you come up to 418 on the dot in both, reject there. Then you come down to 380 on the dot in both and find a bounce there. From there, you come up to 430, that resistance at 430, have 3 touches on it before breaking it to the upside. 1, 2, 3. And then you break that to the upside. Next stop is 438, which you reject from before breaking that, and then you go to 450. Over here, hit 438, rejected that, found a bounce, and more upside today to almost 444. So almost touched 444 today. This looks insanely bullish. Insanely bullish. So breakout of a macro, descending broadening wedge for a year, retest confirmed, upside. Very bullish. Ascending triangle, bullish pattern. Higher highs, higher lows here. Break it to the upside. Retest, find more upside. Very bullish. Golden cross on the daily on the S&P 500. Extremely bullish. Look up the data for yourself, and you could see the percent move that the S&P 500 made after a golden cross on the daily. The historical data on that. Very bullish. 55 days in a row, closing over the 200 EMA. Extremely bullish. Now, this move is perfectly symmetrical. Once we get to 450, I'm going to have to reassess. So if it kept playing out symmetrically from 450, you would reject and come back down to 438 and establish some very strong support there before finding more upside. I'm going to reassess when we hit 450, and we'll see if this is still playing out symmetrically. It very possibly could, but it might not. It might just take off to the upside. So we have to see how that plays out. We'll reassess at a later date. I don't know why, like seriously, I have no idea why people are bearish on SPY. Data Zero being one of them, challenging the ruling on the field that the market is bullish. So let's jump in to the instant replay brought to you by Ants Trades. Okay, uptrend. Higher highs, higher lows. There we go, nice. Breakout. Okay, retest. Nice, reclaim, higher highs, higher lows. Breakout, more upside. Literally 430 to almost 450 in a week so far. This is insanely bullish. After further review, the ruling on the field stands. The market is fucking bullish. The whole entire market is about to squeeze. SPY is going to keep seeing upside. It's going to new highs. The meme basket's about to squeeze. And so is everything else. How many times I have to say it. So, with that being said, the uptrend on SPY, here's your ascending triangle that you have, your breakout and a retest, and now we have this bull trend here. So, bounce, bounce, bounce on the stupid fucking Fed meeting yesterday. Bounce again, and then more upside today. Another new local high. I feel like I keep saying that every day. Another new local high on SPY. Almost came up to 444 today. Very, very bullish there. Jumping into the market sync. So SPY breaking both macro patterns, descending broadening wedge, and the ascending triangle to the upside. There's the macro breakout right there. Ascending triangle, broke it to the upside, retested, and now we have a straight line confirm the breakout. That looks pretty fucking bullish to me. On the right, AMC, macro breakout right here. A month in a retest, confirmed, and now we have an uptrend. Looks pretty fucking bullish. I would say that's pretty bullish. So jumping into the macro once again, this is my macro perspective on AMC. January 2020, you have COVID right there. From there, you drop down into the 3 fractal sequence here, in green, red, and blue. Takes you to your squeeze in January 2021. Come down, you find an uptrend that takes you to the June squeeze. You have a flag here that you break down from, and you reset back into the green, red, and blue. The yellow bars are pulled from right here and overlaid. We're tracking perfectly. Only difference being that we're descending, but we're at the end of the cycle. We broke out and retested, confirmed the retest, and now we have an uptrend going. We are at the end of the cycle. We're about to squeeze. So with that being said, the macro zoomed in. Once again, my macro perspective being up top, the green, red, and blue, tracking perfectly without the bars now. Tracking perfectly, just descending. Down below is the blue box zoomed in, January 2021, took you to your squeeze there, and the blue box of our current cycle that we're tracking perfectly to this and will be taking us to our squeeze. So first bottom, try peak, second bottom, lower low, uptrend breaks you out, retest confirmed, squeeze. First bottom, try peak rejecting resistance, second bottom, lower low, uptrend, breakout, retest confirmed, uptrend. We're about to squeeze. There's no more downside on AMC at all. Higher highs and higher lows from here on out. So once again, jumping into the macro time, here is the January 2021 cycle on the left, the green, red, and blue. That took you to your squeeze January 2021, and then on the right is our current cycle, the green, red, and blue, that we are tracking perfectly, the only difference being we're descending. This pattern was extremely flat, perfectly flat. The bottom was the bottom the whole time. All of the movements flat here, including the breakout and the retest, was flat. It was a W, a symmetrical W that was flat. We're tracking it descending, so all of the price action is descending, including the breakout, and the retest is a symmetrical W. A descending symmetrical W, because we're tracking this in a descending fashion. Once again, the time, green box, 111 days versus 118, 1-to-1. 83 days versus 131 in the red, pretty much 1-to-1. Blue box, 148 versus 310, twice as slow, 2-to-1 here. I mentioned in my previous videos, ape dividend dropped in August, pretty much at the start of the blue box, the blue iteration here. The ape dividend dropped there, and apparently had some kind of effect on the algorithm where we are tracking slower now. It didn't change the macro. We're tracking perfectly. The only difference is we're tracking slower now. So everything looks good. Did that already. Trend angles. Once again, this is the blue box of January 2021 where you squeeze, and the blue box of the current cycle. So first bottom, try peak. Second bottom, lower low. Uptrend breaks you out. Retest, squeeze. First bottom, try peak, second bottom, lower low, uptrend breaks you out, retest confirmed, uptrend off of the retest. We're about to squeeze. The trend angle up top, minus 42 degrees on both sides, exact same angle. Bottom, low to low, 176 degrees versus 178, pretty much the fucking same thing there. The trend angles are the same, the movement's the same. I have arrows marking the bottoms and the try peak. Maybe that helps visualize if anyone needs it. We're tracking perfectly, we're about to squeeze. Breakout retest once again. It's a 4-hour chart. From your breakout here, you actually reject before the breakout. Form this W pattern. Same thing happened in January 2021 as well. You get the rest of the upside, and then you have this micro resistance that pinched us into a descending wedge, holding us to the macro retest. Rejected the top multiple times, and the bottom, the white line, is the macro resistance on AMC, which is acting as support here. A few wicks below in both legs of the W, which I mentioned happened in January 2021 as well. I could show you in the trend angle chart. There's your breakout. There's like the W pattern right there. And then you get the breakout and then the retest and multiple wicks below the previous resistance acting as support. But you reclaim every time, confirm, and squeeze from there. So multiple breaks below, and then we have this uptrend now. Now I mentioned for the past, I don't know, a month of my YouTube videos that this retest is going to be a symmetrical descending W, and it was going to take a very long time. That's exactly what's happening. It's a descending W, it's symmetrical, taking a very long time. When we confirmed the retest, I said you can expect that we're going to be in this uptrend for 2 to 3 weeks, possibly even 4, to get back to that double top that we're looking for. So far, we're 2 weeks in. This is a very slow uptrend. This is a 4-hour chart, 4-hour candles here. 2 weeks in this uptrend, barely moving, barely, like the slightest uptrend. We had that one pop to $5 that I called in my video over the weekend saying AMC is hitting $5 this week. We did. I said SPY very well might hit 450. It still might hit 450 tomorrow, and if not tomorrow, definitely next week. But here's the uptrend. So 2 weeks in, multiple wicks below, actually, one there, one there, one there, and yesterday we came down to the trend, bounced perfectly on it, and then today we broke below, wicked back above into it, and then came back below. So we actually closed below this uptrend now. I'm not worried about that in the slightest. So I'll get into the micro and why I'm not worried about that. But first, the daily retest on AMC, the first bottom, the tri-peak, second bottom, lower low that we got after hours, the uptrend that breaks you out, and then the retest, again, a W in a descending fashion. That's taking forever to play out. Exactly what I've been saying. So that's that. If anyone knows, because I've seen this pattern before, it's like a star type bottom here, and I'm pretty sure it led to a squeeze. I think I saw it on HKD, but I could be wrong. If anyone knows, if anyone's seen this before, let me know, because I'm curious and I don't remember. I'm going to look at HKD after the video. But yeah, this looks very good. This retest took forever, and it held up perfectly. This is a month in a retest, and a few wicks below, but claim it every single time, and then we found an uptrend off of it. It looks fucking amazing. With that being said, if this wants to load, so here's the blue box of January 2021 on the left, and the blue box of our current cycle on the right. So first bottom, tri-peak, second bottom, and then you break out, you know, that whole shit that I say a million times. First bottom, tri-peak, second bottom, uptrend that breaks you out, and then the retest. So where we are on the macro is right here. So, and then you have this W, very symmetrical move here. You have chop in the middle, and then you confirm the retest right here, and this is where we're zooming in. My micro tracking, we're zooming in right here on the 1 minute chart. There's a very slow uptrend that forms here before you get these boom candles. So over here, same thing, the breakout, the W, but it's descending because we're descending. We're tracking in a descending fashion. It's symmetrical, just like this one. The confirmation, and then the very slow uptrend. This is taking a lot longer, so you could actually see the very slow uptrend here. But right here, you can't even see it. You have to go to the 1 minute chart. On the 1 minute chart, there's a very slow uptrend that forms here, and that is where we are on the micro tracking. This is where we are. So with that being said, let's get into the micro. Actually, first, I want to show something before we get into the micro. So we're going to do this first. All right. So with that being said, jumping into the micro. Now, here would be your pink box here. Pink box here, pink box here. Pink box, nice. So you reject 508. Sorry, should have rejected 508, but the wicks are never going to be perfect. 515 was the high. And then you come down. I said we're going to establish support on the top of the green box, the top range. Now, we wicked below it. I'm not surprised to see this at all. I mentioned it in my video 2 days ago that I would not be shocked to see this. Low of the day, 468. What did I say, 470 to 480? 468 low of the day, found a bounce from there. I'm not surprised to see this. I'm still expecting to come back up from this. So, once again, the micro tracking here. I've made the horizontal lines more bold across. So you could see how perfectly this shit lines up. Once again, this is a 1 minute chart. This is January 22nd, 2021, approximately midday when you confirm the retest, which took you to your squeeze. On the right, it's the 4-hour chart of the current cycle that we're trading in. So the yellow box up top, you have the same move on both sides. You break down into the orange box, which is more or less a W. You have your first bottom, and then your second bottom is slightly lower before coming back up to that red horizontal line where you reject. Over here, same thing. First bottom, second bottom, slightly lower, and then you come up to the red horizontal line. We didn't come all the way up to it. This wicked perfectly off it. This didn't reach the line. The wicks are never going to be perfect. Mentioned that a million times. From there, you drop down into the green box. This is your confirmation here. So you drop down, and then you have this price action that bounces on the top of the red box here, and you're rejecting the top of the green box. Over here, same thing. So this price action here is bouncing off the top of the red box, and it rejects the green. From there, you drop down all the way to your bottom, which is your confirmation in both. From there, you bounce up, and you have this very sideways price action here in the red box. Very barcodey, very sideways price action here. Same thing here. From there, you break out of that to the top of the green box once again, and then you double bottom with the purple circles here that are at the bottom of the red. So same thing here, you break out to the top of the green, the wicks are never going to be perfect, you double bottom, the purple circles here at the bottom of the red. From there, you come back up, reject the top of the green one more time before breaking out of it. So you come back up, reject the top of the green one more time before breaking out of it. Now, the red horizontal line that I had was 508, just based off of touch points. The wicks are never going to be perfect. We came to 515. From there, we rejected. Now, it's actually like a triple top here, and that's kind of what we have. So you have the first top to 515, you come down, and then you double top like 509 perfectly right there. And then you come all the way down, you bounce off of the green box as support, you wick below it right there, come back above, and then the past 2 days we broke below it. Now, I mentioned in my video 2 days ago, I would not be surprised to see this at all. I'm expecting to recover from this. It more than likely will play out as a symmetrical move. It's more of a U or a boxy type move, as I've said before. It's probably going to play out symmetrically. It's probably going to play out something like this. So jumping into that on TradingView, and this is on the micro, this is on the 15-minute now. So this is your confirmation right here. All the boxes are the same. I laid it out the exact same way. So you reject the green here, you bounce on the top of the red, reject the green, come down to your confirmation, come up to the red box, which is very sideways barcodey, break out of that to the green range, double bottom, the purple boxes here, come back up, reject the green range again, before breaking out of it, the 508 horizontal line here, we broke slightly above it, came down, double topped right there, and then we broke all the way down, found a bounce on the top of the green box, and then we have this descending channel now. We actually broke below today. We reclaimed, rejected the top of the channel, and pretty much closed right at the resistance. I'm expecting to break this to the upside. So more than likely what happens is we break this to the upside and play this out very symmetrically before coming up to the 530 price target that I have. More than likely, this move is going to play out symmetrically, a V, a U, whatever you want to call it, whatever this. It's not going to look exactly the same. I've mentioned that multiple times, but it's going to look very similar. It can't be more similar than this. The horizontal lines match perfectly. The boxes match perfectly. Touch points are pretty much perfect. More than likely how this plays out, it's like a U pattern that breaks you out to the next range, which would be 535. More than likely that's what happens. Once again, it's a 1 minute chart versus a 4-hour chart, tracking a lot slower. I'm not going to be perfect on a daily basis. I can't say, oh, we're getting this move today, because we could just be sideways. I mentioned that in my video yesterday, that there was a possibility that we would be sideways here in this range. We actually broke slightly lower, but still we're at the top of the green range here, establishing support. From that bottom there, you double bottom perfectly right here. I'm expecting to come up on the other side of this. More than likely a symmetrical move. With that being said, so tomorrow you could probably expect to find some upside here, maybe back up to like the 485, 490 range. I don't think we get all of the move back up, but we get part of it. Now that would run into next week now, where you would get the rest of the move to 535, and then from 535 you come down and bounce on the pink box as support, and more than likely we're going to break lower than this. Like, these are perfect wicks right here. You have a double bottom right here, but these are all perfect. More than likely you're going to wick below it, and then you get the boom candles. Now these boom candles more than likely will be mid to late next week. I wouldn't be surprised if we saw this on a Friday, next Friday. I would not be shocked to see that at all. And my reason being is, first of all, I want to get into the OPEX dates one more time. 21 minutes in. Try to make this quick. So first of all, both squeezes on AMC, January and June, landed 7 trading days post OPEX with a holiday in between. So you have OPEX January 15th, holiday on that Monday. 7 trading days later, on a Wednesday, you peak. The June squeeze, same thing here. OPEX May 21st, 5 days there, weekend, holiday Monday, 6 and 7. Lands on a Wednesday. 7 trading days post OPEX with a holiday in between. Both squeezes landed exactly the same. Now, there's no way this could be a coincidence. So it has to hold some kind of weight. The odds of that happening are astronomical. With that being said, the next 2 OPEX dates that we have, so annoying. Next 2 dates that we have is June 28th and August 1st. So the June OPEX date was the 16th. Is the 16th, it's tomorrow. And then you have that holiday on Monday, Juneteenth. 7 trading days later would land on June 28th. The August OPEX date, or it's July running into August, there's no holiday, and in my opinion, that's too far out. Just based on where we are on the macro, use this one. Based on where we are on the macro, another month, I don't think so. We already confirmed the retest, and we're in the uptrend now. On the micro, where we are is in this pink box right here. We have one more move to the upside, one more retrace before we get the boom candles. These boom candles took you to your squeeze in January 2021. So we're tracking slow, but we're inching our way towards these boom candles. We're very, very close to getting these. So with that being said, the OPEX date, the August OPEX date, sorry, July, because it actually runs to August 1st. I don't think so. So the next OPEX date we have is the 28th, and this makes a lot more sense to me, where all of next week we finish the rest of that slow uptrend, and potentially we get the boom candles on that Friday next week, and then Monday, Tuesday, Wednesday theoretically would be your peak. The way this played out in January 2021 was, these are the boom candles that we're looking for, and then you gap up here, and this is 2 days. 2 days here forming this W, and then you just wake up the next day to your highs, pretty much. So the August OPEX date doesn't make much sense to me. The June one, it looks like it's the one. I'm not saying 100%, but as far as the way everything looks right now, SPY is shredding to the upside, which I've mentioned multiple times is very important, because the previous 2 squeezes on AMC, SPY was shredding to the upside. So it looks good. I'll get into the price targets like more in depth when the time comes. I just want to touch on one more thing here, being Ape, which, I mean, that's a breakout on Ape today. So honestly, this chart is just a fucking mess. You have it's a inverse head and shoulders here that you break down from, and then you have this triangle here that we finally broke out of today. So that looks good. Are we inverse Ape still? Probably not, but there is a chance. I don't see AMC having any downside, so I would say we're not inverse Ape. So Ape just broke out of its pattern there, its macro pattern. That looks very good. And AMC had confirmed the retest, and we're in the uptrend now. So along with SPY just straight lining to the fucking upside from this macro breakout here. So the market is extremely bullish. The market's about to squeeze, and everything looks good. We're tracking perfectly, and that is pretty much the video. My price targets, once again, is 140 based off macro Fibonacci extensions. I'll do it again one more time. Fuck it. So the green, red, and blue here, I mentioned this in my video yesterday. The green, red, and blue here is one macro fractal here, and the blue box being zoomed in right here. This gap up here is your macro fractal break, which takes you to your squeeze in January, which is right here. Then this whole thing to the end of the flag after the June squeeze is a macro fractal. You break down, the macro fractal breaks right there, and then you reset back into the green, red, and blue, tracking this perfectly. So the two scenarios for squeezing our peak that I have is $140, which is based off macro Fibonacci extensions, where this would look more like a stair-stepping type chart, where you have your first squeeze here in January come down, June squeeze here come down, and then 140, and then you come down. More than likely it would go 140, come down, uptrend, MOS. That would be that scenario. The other scenario is that the next macro fractal that we get is the MOS. The next macro fractal could possibly be the MOS fractal, and that would be a fucking straight line to the moon. So that's pretty much it for the video. Everything looks good. I really would love to see some upside for AMC tomorrow. We probably will. Doesn't have to be a bunch. I would like to at least come up to 485, touch it at least, possibly 490, start curling back up to the upside here. And SPY, I would like to see 450. We don't have to see 450 tomorrow. Could be another doji here maybe. But I would like to see 450. If we don't see it tomorrow, more than likely next week we'll see it. And then we'll reassess the situation and see if we're actually tracking symmetrically still. So that's it for the video. I'm almost a half an hour in. I'm going to cut it here. Take care, guys, and I'll catch you in the next one.